Hi, this is Ian Coleman from Signal Centre. Welcome to this week's video analysis. We're going to be covering all the FX majors, dollar index, highlighting chart formations, bespoke support and resistance levels, basically what we think is going to be happening this week. So let's go and have a look at the charts. We're going to start off with the dollar index. Here we can see the weekly chart. We've had a bearish Elliott wave count to the downside, been holding within this wedge formation for quite some time now, actually 40 weeks. We've posted, or we've reversed all of last week's losses. Could be seen as an inverted hammer formation. The bias is now to the downside. If we go to the daily chart, here we can see a bearish outside day. That candle formation often indicates the end of a trend and the start of a new downward bias. We have got trend line support here, which comes in around about 97.38. So we've seen 2 days of net losses going, or Thursday and Friday of last week. Could see another day of net losses and then maybe some stalling in price action and a small corrective move to the upside. The measured move target is down here, and that is also a 261.8% Fibonacci level. So it all lines up quite well. So what we're really looking for next week is to sell into any dollar bounces. If we go to euro dollar, let's go to the weekly chart first. Levels close to the 61.8% Fibonacci. Found some buying interest. Again, opposite to the dollar index, got a bullish count to the upside. Very mixed and volatile trading for about the last 40 weeks. If we go to the daily chart, that mixed and volatile trading has actually posted 2 wedge formations. So we've got this outside wedge and then we've got this inside wedge formation. We've got a trend of lower highs at 112.24. But this level up here is quite important. We've got the measured move target for this inside wedge at 114.48 at the beginning of this week. If we go to the intraday chart, remembering where that wedge target is, we've got this trend of lower highs. We've got some bespoke resistance as well at 112.32. So although we are bullish over the long term, I think again there's scope for maybe a mild correction at the beginning of next week, which I believe will offer opportunities to buy into any sort of euro weakness. 161.8% extension at 113.20, and then the 261.8 extension at 114.52, which is very close to this this wedge target. So just to reiterate what we're looking at, we're bullish overall. I think mild buying at the beginning of next week, could then see a small correction to the downside, and then looking for these wave or Fibonacci extension levels to take euro dollar higher. If we look at cable, we're still holding on to this monthly bullish candle. Got a bullish outside month which was posted in January of this year. Has an eventual bias to break to the upside through this wedge formation. I posted this last month, 131.86. Now that's the level that we needed to close this month above to keep a bullish count. And we did see quite an aggressive move to the downside. If we go to the daily chart, we've got a reverse formation. So we've got a morning doji star formation. That formation often indicates the end of a trend and the start of a new upward bias. Reverse trend line resistance, and again quite important, located at 128.06, pretty close to the previous swing high, which was at 128.13. If we go to this time frame, we've got our bespoke resistance levels. So one here and then up here, 128.01. So remember, we've got that reverse trend line resistance of 128.06, lines up pretty well with some Fibonacci levels. 128.12 is a 261.8% extension. So again, we're immediately bullish over the short term, but then I think we might see a deeper correction to possibly form a reverse head and shoulders pattern. So this would be the head, This will be the left shoulder. This potentially, of course it's not formed yet, will be the neckline. Then a move back in a corrective formation to form the right shoulder. Dollar Swiss, another one that's playing out quite well to Fibonacci levels at the moment. Bearish outside candle posted on the weekly chart. Again, quite an important level. 99.24 is the trend of higher lows. If we go to a shorter time frame, Elliott wave formation to the downside, 99.38, very close to that aforementioned trendline support, and then we've actually got some bespoke support at 99.33. So again, immediately bearish, but only over the short term, and then perhaps a corrective bounce. This reverse trend line will be quite interesting if we get down to that level to look at shorts over the long to medium term. Dollar yen. Let's go to the weekly chart first. Here we can see a bearish outside week, again posted at the high in a large triangle formation. There's really no clear indication that this sell-off is coming to an end. Just looking for the price tab on here, price label. So we've got this trend line support coming in around about 108.40. If we go to shorter time frame, let's go to this time frame first actually, daily chart. Bullish count to the upside, and then it's been quite an aggressive corrective move to the downside. An ABCD formation would take us down to here, which is around about 107.50. We have got some bespoke support at this level at the beginning of next week, 108.90. So really need to break that support level to continue this move to the downside in dollar yen. Dollar CAD, and this is the only one really of the major currency pairs, or the dollar major currency pairs, that has economic releases next week of any really significant interest in the market. It's the Canadian interest rate decision on Thursday. So we could see a move in the Canadian dollar, which would be nice because we have stagnated for quite some time now. Got a bearish outside candle on the weekly chart. We've also posted what we call a DMARC 13 count on the weekly chart. That often highlights the end of a trend and the start of a new downward bias. We've seen some inside soldiers posted on the weekly chart, and that highlights investor indecision. If we go to the daily chart, here we can see that mixed volatile trading. We might be forming a diamond formation here, a topping pattern. We've actually had, let's have a look, 22 days of pretty mixed volatile trading. This is prime area as far as I'm concerned to get short. Remember, we've got that 13 count, so we really should be selling into rallies. Got a 78.6% Fibonacci pullback level around about 135.35, and then the trend of higher highs at 135.61, offering quite a decent sort of shorting area to the upside. The measured move target for this formation is down here, which is around about 131.15. Aussie dollar, and again, sort of, we've stalled, but we haven't taken any sort of strength from this stalling, and we haven't taken any strength really from the dollar weakness that we saw last week. We've seen two up days. We had that gap open, closed pretty quickly. We've got quite a lot in the way of bespoke resistance. 78.6% Fibonacci pullback level seems to have stalled the sell-off. We are bullish, but we're wary. We haven't really got any reversal formations yet. It's working out pretty well with fibs. We've got a 161.8% extension level on Friday at 69.30. We've got our bespoke resistance at 69.35. Just stopped short of that actually on Friday. But commodity currencies, sometimes they run to 423.6%, which is up here at 70.35. We've got bespoke resistance at 70.25. So we're going to see how this major currency pair plays out at the beginning of next week, really looking at getting long, just buying dips again for a further move to the upside. Euro sterling, let's look at the monthly chart first. Here we can see a bullish Elliott wave count to the upside. We formed a wedge formation. We've broken lower. I don't believe that the ABCD formation has completed. We've got reverse trendline resistance at 88.87 this week. If we go to shorter time frames, let's go to the daily chart. We've got a 161.8% extension level located at 88.77, which is also pretty close to that reverse trendline resistance that we just mentioned. If it is a corrective formation, and all these corrective formations are normally in 3 or 5 waves, we could quite possibly stall up here at 88.77 and complete just a 3-wave correction before we have a deeper 3-wave correction to the downside, and that's my belief. Obviously, we've had Theresa May resigning on Friday. That's given sterling a bit of a boost. Is it going to really sort of power through cable? We'll have to wait and see, but that's the level that I'm looking at the beginning of this week. To the downside, 87.35 is our bespoke support. Euro yen, and this is also making me wonder whether or not we'll get just a little bit more of a corrective move to the downside in euro dollar. We had an impulsive move higher. Again, all these inside waves are counted in 3 waves, which highlights that it should be corrective. This last wave down, possibly in 5 waves. We formed an ending wedge pattern, a break of 123.38, and the measured move target is up here, 126.81. To the downside, we've got the fib level, 122.15, and then we've got the trend of lower lows at 121.82, and it's really that level that I'm going to be looking at to see whether or not we get a reaction to the upside. Okay, I hope you've enjoyed that analysis. All the best of luck for this week, and we'll speak to you again soon. Many thanks.